If you have a company that's worth $2 million right now, the single most lucrative thing you could do is sell half the company for $2 million and own 50% of a company worth $4 million and invest the $2 million in Bitcoin, which will grow 60% a year. And in 10 years, you can retire from the other company, right? $2 million growing 60% a year, it doubles 5 times. You've got 2, 4, 8, 16. At some point in 10 years, you've got a $32 million company growing 20% a year. And you're not working.
Michael Saylor pitched the company's Bitcoin-backed preferred stock as a superior alternative to traditional bank accounts for retirees, promoting securities that offer a 9.5% yield compared to typical savings rates ranging from 0.1% to 4%. During the company's second quarter earnings call on Thursday, Saylor described the company's latest preferred offering, STRC, as particularly attractive to conservative investors seeking stable income. Appealing to retirees, it's attractive to a whole group of people, he said, explaining the product's appeal to those seeking higher returns without long-term commitments. This presentation comes after Strategy reported a record quarterly profit of $10 billion, driven primarily by the surging price of Bitcoin, which rose from $77,000 in the first quarter to over $111,000 in the second quarter. Based in Virginia, the company, formerly known as MicroStrategy, pioneered the Bitcoin enterprise treasury strategy and now holds 628,791 Bitcoin worth over $74 billion. According to Michael Saylor, this is how you can achieve financial freedom with Bitcoin. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on Solana and the overall crypto market.
Bitcoin is an example of a perfect monetary asset. So once you saw perfect, then you can ask the question, what makes it perfect? And then you can see what's the defect. And so I guess what's really changed for me over the 5 years is having spent enough time thinking about engineering of capital and engineering of economics, and looking at the door that the Bitcoin opens. I just realized that the Austrians and the libertarians, they struggle because they didn't have the science, they didn't have the engineering, and so they were hopeless. and their plight was hopeless. And Bitcoin, as we said, is hope. The solution to all these problems is never in the history of the ideology. It's in the science and the engineering.
Bitcoin bull Michael Saylor has reiterated his confidence in the long-term value of Bitcoin amid rapid geopolitical trends and cryptocurrency adoption. During his keynote address at the Bitcoin Prague 2025 conference, Saylor predicted that the price of Bitcoin would reach $21 million in 21 years. He believes we will reach $21 million in 21 years. This is a unique moment for the network, perhaps the only time in the network's history where we have looked ahead 21 years and seen $21 million. Saylor's latest bullish prediction for Bitcoin marks a significant increase from his previous forecast, made at the Bitcoin 2024 conference in Nashville last year, where he predicted that Bitcoin would reach 13 million by 2045. Saylor's growing optimism about the Bitcoin market with numerous geopolitical, regulatory, and adoption developments, which he said no one had imagined last year. The events of the past 11 months have been extraordinary. He emphasized that he had always been bullish on Bitcoin, even when it plummeted to $16,000 during the last crypto winter, but that Donald Trump's presidential victory last November had led to a sea of change in policy. He stated, "We didn't think the president would say the United States would be the world's Bitcoin superpower. This is an extraordinary development. U.S. states are embracing Bitcoin." Last year, Saylor received heavy criticism for also rejecting the concept of self-custody, the ability to hold Bitcoin without third-party intervention, which remains a core idea of the Bitcoin community. After receiving criticism from the community for suggesting Bitcoin holders entrust their assets to banks, Saylor reversed himself on self-custody, stating that he supported it for those willing and able in October 2024. Saylor emphasized Bitcoin's unique position in the financial ecosystem by stating Bitcoin is money. Everything else is credit. This statement underscores Bitcoin's role as a store of value and highlights its distinction from other cryptocurrencies, which Saylor characterizes as forms of credit or debit instruments. This view resonates strongly in institutional circles, where Bitcoin is increasingly perceived as a form of sophisticated, programmable, incorruptible, and scarce capital. This view elevates Bitcoin beyond a mere speculative asset, positioning it as a fundamental monetary instrument with important implications for portfolio management and treasury strategies. Saylor's classification influences how institutional investors evaluate digital assets by differentiating Bitcoin as a currency. It implicitly challenges the valuation models applied to altcoins, which are often equated with equities or credit-based assets. MicroStrategy's pioneering approach to Bitcoin investing has set a precedent, prompting other firms to consider Bitcoin as a legitimate treasury asset. Market analysts note that Saylor's rhetoric could accelerate institutional adoption, thereby boosting demand and liquidity in Bitcoin markets. Analysts note that the growing acceptance of Bitcoin as digital gold could capitalize the broader adoption of blockchain technologies, fostering transparency and efficiency in financial transactions globally. Michael Saylor's reaffirmation of Bitcoin as the ultimate monetary asset reinforces its unique position in the cryptocurrency landscape. By distinguishing it from other digital assets as real money, it influences institutional investment strategies and regulatory approaches. This perspective not only strengthens Bitcoin's credibility in the market, but also signals a potential shift in global financial paradigms. As regulatory frameworks evolve and institutional adoption grows, Bitcoin's role as a cornerstone of digital capital is increasingly cemented, offering investors a resilient store of value amid economic uncertainty. Bill Pult, the new director of the Federal Housing Finance Agency, FHFA, now responsible for regulating much of the U.S. housing market, wants to determine whether your cryptocurrency holdings, such as Bitcoin or Solana, should be considered when applying for a mortgage. The study will focus on the use of cryptocurrencies to obtain a mortgage. The FHFA will also determine whether your Dogecoin holdings should be considered legitimate assets when applying for a mortgage. Michael Saylor immediately responded to Pult's responses, stating that he has developed a Bitcoin lending model that he would be happy to share. For now, the FHFA says it is only studying the idea of integrating cryptocurrencies into mortgage lending. But even opening this door marks a major shift in how federal agencies view cryptocurrencies, not just as speculation, but also as a potential financial infrastructure. Cryptocurrencies are notoriously volatile, prone to scams, and rarely stable enough to allow for long-term planning. Their introduction into the housing market could bring chaos or innovation, depending on your faith in blockchain. Either way, if you've ever dreamed of holding on to your cryptocurrency long enough to buy a house with it, that future might be closer than you think.